Okay, before we go to dinner, I'm going to ask that you do one more video. Of course, this is, you know.
All right, so first off, I think we should acknowledge that my wife Allie is the one operating the boat.
Where are we?
We are getting ready to head up the Miami River for dinner, and then we will have a moonlight cruise back home. Financial controls. All right, first off, you got to keep in mind, 10 years ago, I was, no joke, I'm not kidding you, I'm not exaggerating, completely and totally flat broke.
But RJon, how could that be?
Well, I built a successful practice, made good money, had a good time, helped a lot of people, did a lot of good stuff. But I did not put processes and procedures and systems in place to allow me to hire and build a team so that when my wife, who you just saw, got sick, I had to make a decision, and it was a clear and decisive decision, but nonetheless a gut-wrenching decision to sacrifice my practice in order to take care of her. And she had an illness. She's fully recovered now, as you could see, but for 18 months we were in and out of hospitals, and we didn't know what was wrong with her for a long time. And my time was invested in taking care of her, and my energy was consumed with what was going on with her, and I was unable to function. And because I did not invest the time, ironically, the shoemaker without shoes, the baker without bread, right? I had helped thousands of lawyers by this time build successful law firms, but I had failed to practice what I preach. So when I tell you, I mean, when I get all up in your face about you've got to build a business and you can't just settle for having a practice, it's because I don't want you to experience what I experienced. You know, it might not be you who gets sick. It might be your spouse. It might be your significant other. It might be one of your kids. It might be a parent. Life happens, right? I mean, as lawyers, we know this. We're in the business of dealing with the fact that life happens. So, look, financial controls. That's what we're here to talk about today before we go to dinner. But the life I have today, the problems that I have today are the things I used to fantasize about 10 years ago. I used to dream about and fantasize about the kinds of problems that I have today. And had I known then what I know now, if there was someone I built this business to do for you what I wish someone had done for me, because no one taught me this stuff. And I want to lay it out for you and keep it simple and not complicate it, and show you there's really only 7 main parts of every successful law firm, and you get these 7 main parts under control and your law firm works for you. If you don't get these 7 main parts under control, it's only a matter of time until something happens, and I don't want you to wake up with the shame. And I had shame, and I had embarrassment, and I had guilt, and I had regret that I knew better, but I didn't do better, and so it didn't do me any good. And so when Allie got sick, my life fell apart, and I went broke. We lost our house to foreclosure and everything else, and now we've got this amazing life that you could have an amazing life too. Financial controls. That's what I got to teach you, and then we're going to go to dinner before it rains. And then
give me one tip.
I'm going to tell you everything. I'm going to give them something great.
Okay.
There are 6 key financial reports your bookkeeper ought to be giving you every month. If your bookkeeper is not giving you all of these 6 key financial reports, your bookkeeper is not doing the job they need to do to empower you to be in control of your business. Now, it might be that your bookkeeper isn't giving you these reports because you're not asking for them, or it might be that your bookkeeper isn't giving you these reports because you don't see the value in spending a few dollars to get the controls you need to be in control of your life. Or it might be that your bookkeeper is giving you these reports and you're just not looking at them, which is often the case. So here are the financial reports. Every month your bookkeeper should be giving you a 12-month forward-looking budget. A budget is not a historical record of what has happened. That's called a log. A budget is a 12-month forward-looking projection of revenue by category and expenses by category. Every month your bookkeeper should be updating your budget based on what has happened year to date and then projecting it for the next 12 months. Number two, your bookkeeper every month should be giving you a cash flow projection. This is a projection week by week of when the revenue's projected to hit every week and when the expenses are projected to hit every week, so you can match them up so you don't have a cash crunch. This is how you prevent cash crunches. Or at least you can see them coming 6 weeks in advance while you're still empowered to be proactive instead of in reactive mode. Number three, every month your bookkeeper should be giving you what's called a budget variance report. This is a simple comparison of what you projected was going to happen, column 1, which is also known as our best educated guess. And anyone who tells you that their budget is better than their best educated guess is bullshitting you, or they don't know what they're talking about. I have helped thousands of business owners build successful budgets and multi-million dollar businesses. Well, I haven't helped thousands build multi-million dollar businesses, but I've helped lots of people build multi-million dollar businesses. And I'm telling you, anyone who tells you that their budget is better than their best educated guess is full of crap. Now, with practice, your best educated guesses get better, but you can let yourself off the hook. It doesn't need to be perfect. Budget variance report is your projected revenues by category, your projected expenses by category, column 1. Column 2 is what actually happened in reality. Column 3 is the percentage of difference and the dollar variance difference. Column 4 is the reason why. And this is where you as a lawyer really are much more qualified and much better skilled and much better able to make use of a budget variance report than even an accountant, even a CPA. You as a lawyer can take your skills in discovery and investigation and research and analysis and analyze and figure out why did our projection not match reality? Why did reality not match our projection? And investigate the reason why. Get to the bottom of why. And then the final column, which is the most important column of all, is what's the plan? What are we going to do differently going forward based on our analysis of why reality didn't match our best estimated projection? That is your budget variance report. If I only had one financial report to look at every month, I would look at my budget variance report. Budget variance report, budget, cash flow projection, budget variance report. Work in process, number 4. How much work do you have that's in process that you're building up value? You've got cost of goods sold sunk into it, but it's not yet ready to actually be turned into a bill and given to a client so that you can pay it. That's your work in process report. That tells you how much cash you're going to have 2-3 months from now by analyzing your work in process report. That also helps you analyze your cost of goods sold. Budget variance report, cash flow projection, work in process, accounts receivables. You need to be looking at an AR report. Maybe if you do 100% contingency, you don't have AR. But everyone else, you need to be looking at your AR report. You need to be looking at your AR report not by pile of money, but by name of client. Which clients by name owe us how much 30 days? Which clients by name owe us 30 to 60 days? Which clients by name owe us 60 to 90 days, which clients by name owe us more than 90 days, and you've got to put a red rubber band around the file when the client owes you money. You got to stop getting deeper and deeper into the hole with the clients who owe you money. Now, obviously, if you let it go too far, there's situations where you can't stop working on the case, the trial is approaching, the judge won't let you out. You're what we call, the technical term is you're screwed. But you don't need to let it get that far. And with practice, you'll stop letting it get that far, and then you'll learn to use your trust account the way it was meant to be. Your IOLTA client property trust account was originally created in the 1980s specifically for the purpose of helping you avoid accounts receivables problems and to make your law firm more profitable. A lot of lawyers don't know that, but it's true. Jimbo, will you put a link here somewhere where they can opt in to get a free lesson on how to manage a client property trust account as the profitable law firm management tool it was originally meant to be? Will you do that?
For sure.
Okay, and the last thing I want to ask you to do for them is give them an option to opt in for a free. You got to get a big slice of humble pie to watch this video, because of the last live quarterly meeting. So for the last couple of years, we've had our members have been asking me, will you teach our kids business? And so we have a kids entrepreneur club at all of our live quarterly meetings for kids ages 3 to 12. And the members have been asking, will you teach our teenagers about business? And so we ran our teenage entrepreneur boot camp at the last live quarterly meeting. And I taught the kids budget, how budgets work, cash flow projections, accounts receivables, all these things I'm teaching you. And I taught the kids how to figure out the difference between gross revenue, top line revenue, cost of goods sold, what it costs to deliver the actual services, gross profits, fixed expenses, to come up with net income. And you cannot lose money on your gross profits and think you're going to make it up on volume, notwithstanding the fact that lots of lawyers try to do that. Eventually, you got to pay the piper there. So I taught the teenagers how to figure out cost of goods sold and gross profits, and I got through the lesson with them in about 20 minutes. And afterwards, I said, you got it? And they all looked at me like, yeah, we got it. And I said, are you sure you got it? And they're like, yeah, we're pretty sure we got it. And I said, are you really sure you don't have any questions? And they're like, what are we missing here? We got it. And they repeated it all back to me. And I was like, I'm just a little bit surprised, because I taught 30 of you about this in 20 minutes. And normally when I teach this to lawyers, it takes me about 45 minutes. And they were like, how could, what is so? Lawyers, we love to complicate shit, don't we? So at the Saturday night unplugged for our members at the live quarterly meeting, I asked the teenagers, would you like to get up on stage and teach this to your parents? And they said, yeah, we would. And of course I paid them too. And so Jimbo will include an opt-in if you want to learn about the difference between gross revenue, cost of goods sold, gross profit, and net income. And remember, net income is what your family cares about. Gross profit is what we talk about at cocktail parties. Net income is what gives you this, right? Gross revenue doesn't give you this. Net income gives you this. To get between gross profit and net income, you got to understand cost of goods sold and gross profits. Anyway, so Jimbo, you'll include a link where they can click to watch the lesson from the teenagers teaching this stuff. So you'll see this is not complicated. You can master this. I do not have an MBA. I do not have a CPA behind my name. My undergraduate degree was communications, law, economics, and government, which means I learned nothing about business or finance or any of this stuff. And if you know me well, you get to know me one day, hopefully. I'm not a math guy. I can't do math. I can count money. I can read financial statements, but I can't do math. You don't need to know anything about math really to really take control of the finances of your law firm. That's the most important thing to know, is you don't need to know math to be totally in control of the finances of your business. And having total control over the finances of your business will give you a better life. It really will, and it'll help you help a lot more people. So we got a lot of fun stuff going on in this video. We got the opt-in for the how to use your IOLTA Client Property Trust account as the profitable law firm management tool it was originally meant to be. By the way, that's like circa 2006, so don't laugh at what I sound like and what I look like, and I look very young. And we've got the opt-in for the teenage lesson on gross revenue and all that kind of stuff. And
what are we going to get in the boot camp then?
Oh, we're going to
more to come.
Well, yeah, we're going to get into we're going to get into the details of all this stuff. By the end of the boot camp, you will feel in control of your finances, perhaps for the first time ever in your life. I promise you that. All right, opt in. I'm getting hungry. Let's go to dinner. It's starting to get dark. This is awesome. What a great idea to do this. Thank you for suggesting this, Jimbo. And by suggesting, I mean forcing me into it.